Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Well, grains mostly lower on Friday, and the cattle futures, boy, we had some limit down closes there. Mark Schultz is joining us with Northstar Commodity. Let's talk about the cattle market. Limit down moves, a lot of this in reaction to fear about maybe the Mexican border reopening with a meeting coming up here this week with Mexico, right?
Yep, combination. You had some more stats about what's going to happen, allowing more Argentine beef to go under the quota system into the U.S. from Argentina. But I don't think that was the one that would drive the market sharply lower. So it has to be a combination, and opening the border of Mexico probably is the quickest and the fastest way in which to drive cattle prices to the downside. And we certainly saw that on Friday with everything being a lockdown, the limit. So we'll go expanded limits. So we'll see how this all plays out.
All right, so December live cattle down $8 for the week. November feeders were down $20. How much lower do we have to go to price all of this negativity in?
I would say somewhere between $3 to $4 lower from where we are right now, maybe $5. But if you start doing that by the end of the week, you're going to put in a monthly key reversal lower on the cattle charts. And that's going to cast you the negative tone in the big picture. You might get a rally back on up, but rallies will only be meant to be selling opportunities after that.
Because the funds are going to liquidate here now, aren't they?
Well, they're going to liquidate. And with the fact that we got to limit as quickly as we did today, in most of the contract months, they didn't have an opportunity in which to get on out. So I would suspect there's still a lot of length in this market. Now, on the flip side, you still had a cash market and a cutout chart market. That cutout's closing higher for the week. The cash is going to end up, Packers were bidding 240 on Wednesday, Thursday. They lowered that to 238, getting the cattle bought. They dropped a couple bucks. And the Packers still in negative territory with in red ink on any animal that he's killing. And this, I believe, is the 5th week in a row now that they will be in negative territory. But they'll certainly try to get that back into something closer to $30 to $40 a head loss versus the $190 to $200 that they've been experiencing.
Well, you kind of expected cash to be down because of the way the futures board was limit down. That kind of took away some of the resolve of these feedlots, didn't it?
Oh, absolutely. And I think once they saw the futures dropping lower, all of a sudden, even selling cattle at 238 has got you a $4 and $5 premium cash to the futures market. So it's to their advantage to step it up on the sales.
But how far can you fall in the futures mark before cash actually holds the market up? Because cash has been king. That's what's pulled us back every time we've had a correction.
Yeah, I think in the bigger picture, for short term, it's going to be a little tough because you're still going to be tight. Even if you do bring in beef quickly from Argentina, I don't think the amount could be that significant in which to have a tremendous impact. I figure somewhere maybe 6,000 to 7,000 more cattle per week would come in. But we're 40 to 50,000 running below a year ago on a weekly basis anyway. Bringing the cattle in from Mexico, I think we'd have to have a combination of two things: open up the border or find something else that more beef that has been slaughtered down and fed in Mexico starts to come back to the U.S. Might be another way. And of course, the third one, the trifecta, would be something where he lowers the tariff on Brazilian beef.
But the fact that the government now has a plan to lower beef prices basically kind of topped the market here, didn't it?
Well, it looks that way. And I would say this, I mean, it's been going on a straight up market to the upside. And quite frankly, when you look at it, it was getting to points that unsustainable to continue on. If it continued up, you're going to start losing demand. I think we've already lost some domestic demand. And I will say this, it probably is going to take longer to get the beef prices at the grocery store to come down. Going to take a little bit longer than just what's happening in the futures. But the futures are anticipatory. They will do what they believe it's going to head to in the near future, not what's happening right up front.
Following up on the Argentina beef imports, was the move political, in your opinion, by the administration, or what motivated it?
It probably had a little bit. You've got the presidential elections going on this weekend in Argentina. Obviously, Trump would like to see far right continue to hold office, and that's going to be nip and tuck of whether he can pull that off. If he doesn't, and the left gets in, things might get a little bit more dicey in here for us as well. But I think President Trump is trying to do whatever he can to try to keep this going to where at least we have some ally at the present time coming out of the South American area.
Hogs have been kind of hinged or tied to the cattle market. So if cattle go down, can hogs hold together here or not?
That has got me a little bit concerned. I do think that short term, you have a tendency to give a little bit of a bounce back to the upside for the hogs here for the short term. But then one's got to be careful. Now, also, one has to watch too, because you're doing the pits cleaning right now. So if you're going to get the PRRS, the spread, which we've been being inundated with the pork industry for the last 3 years, got to be careful about this time of the year if whether PRRS starts to rear its ugly head once again. If it doesn't, then the upward potential for the hogs probably becomes more limited.
And the grain market on Friday, at least corn and soybeans, saw a little bit of easing. We'd had a good run there. Was that just profit taking? Did we just run up into some chart resistance?
In the case of corn, we ran into some chart resistance. That resistance is right around 430 basis, the December contract. Now, if you can clear that, fine. But here too, you've got a weekend which is going to be mostly dry. You're getting to the back end of the harvest for corn. So therefore, I think you probably maybe see with the rally up, might see a little bit of farmers selling going on that market. So you have to clear those first. So it doesn't surprise me that you had a little bit of a pullback. In the case of the soybeans, interesting move. I mean, quite frankly, and I've said this before, these beans continue to do quite well with all the negative news that's around. We were up a 44-cent rally in the last 9 trading days for beans. You're going to have to ring the cash register sometime.
All right, thanks so much. That is Mark Schultz with Northstar Commodity and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.